Hello traders, Gary Wagner here, just about 10:45 in Honolulu, 4:45 in New York. It is Thursday, 6th day of April, 2017, and this is the Daily Report for Gold and Silver. Markets are actually muted and quiet today as market participants await some indication of how the Chinese-American summit is underway and going. Both planes have landed, and so we're moments away from getting some kind of real news. Gold is trading very much unchanged. If you recall, yesterday it closed at around 57, so although we're showing a print of up $5, it's where they actually cut off the close and then start the open again. We are trading at 1253.60 with a high today of 1260 and a low of 1251. So as you can see, we're closer to the low, but we are talking about a $9 range on the day. Spot gold's trading at 1251.77. Net change down about $3.40. On the low side, 49, and the high side, 58. Over to silver. Silver showing some positive gains today at 1826, but very close to where it closed at yesterday. The low on the day has been 16, and the high on the day has been 35. So as you can see, we're looking at really muted ranges across the board in the precious metals markets. As you can see by reflected on the chart I've just put up on the screen, very little activity, a little bit of downside action as the market gave back, about $3-4. We got in yesterday, of course, at $12.50 for some of our subscribers. We're long at $12.37 for some of our other subscribers. All stops are below $12.39. And I wanted to spend a second really talk about the stops, why they are where they are. And when I say below, what's a good rule of thumb to work with? As you can see, below $12.39 would put you below this line right here. That's $12.40. And it was based on these series of lows that came into the market, this being on March, mid-March, let's say. And the fact of the matter is that since this market has moved higher, this has been an area that has provided some pretty eloquent support. Now, just below that is the 38% retracement at 1236. So by saying below 1239, you can put it at 1238 or 1237. If I say just below, I'm talking about $1 below. When I say below, you can, if you want to make a wider stop, put it around 35, put it underneath this particular fib retracement point. However, I do believe we should be safe by having a stop placed where it is right now, as long as we're at around 1238 or lower. So I have converted our candlestick chart to a Japanese average chart so we can get some sense of the trend or lack of the trend in this particular case. As you know, Japanese average charts are great at filtering out noise in the market. So when you get defined downtrends or defined uptrends, you get clear indications, but you also get strength of trend by looking at how the candle is in relationship to the prior trading session, because the open is always fixed off the midpoint. You can also see real nice key pivot points as the color changes and body size diminish. Usually you'll get some sort of a doji as we have down here before it moves into rally mode or into corrective mode. What we can say about recent activity is we're getting alternating small-bodied candle color with wicks on both sides, and that tells me that honestly there is no solid trend intact. It doesn't tell us that we've got a key reversal here, nor does it tell us whether or not this market is simply consolidating like it did here before moving to higher ground. I think a lot of it is very, very dependent on what the outcome of this weekend's meeting will be between China and America. We are trend traders, and as such, we look to identify longer-term moves in the market and attempt to capitalize by being in the market as long as possible, and most importantly, positioning ourselves in the proper place before a move happens, because it's very difficult to enter the market once the move is already underway. That is the reason I tend to look at longer term charts such as daily or weekly. Now, we're not at the end of the week. It is Thursday. Of course, tomorrow we'll have the weekend review, but we can already see that there is a high likelihood that we will finish solid on the week, meaning finish in green. And if we do that, it will be the fourth consecutive week in which the market has opened at a certain point and closed higher on Friday than the open on Monday. However, it is not that large of a spread right now between Monday's open and current pricing. However, what you will see is when we convert this to a Japanese average chart, as I talked about, it tends to really remove the noise and give us a better indication. And when we do that, this chart shows us that we're still in solid bullish territory with a trend definitely still intact. We have decent body size. We don't have large body sizes we might here or on this candle here, but we do have decent body size. We have no tails, which is very important because what that tells us is that at no point during this week's trading activity did it trade at or below the midpoint of the prior week. And that's important. Body size is diminishing. We'll have to see what happens tomorrow, but this is still a strong indication that there is a very, very decent probability that this uptrend is still intact. In other markets that we follow, very much the same protocol today. Very, very quiet and muted markets as they await some kind of news out of the summit, which, as I said, gets underway today. Dow Jones Industrial Average closing up about 15 points at 20,662. Net change on the day is under 0.1%. About 0.2% rise in the S&P, closing at 2357, and then the Nasdaq also trading higher, up about 0.25% at 58.79. Now, oil did trade higher today, back above $51 with a 54-cent rise per barrel. It is at 51.69, and the dollar is trading higher today, but again, a very, very small range, about 0.2% at 100.65. We talked about the fact that markets are muted in my opening statement. There's really very little change almost across the board, with the exception today of crude oil. Crude oil up about 1.2%, and while that is not tremendous for oil, we've seen 5% swings in oil on volatile days. What is key and important is, on a technical basis, the fact that the price point of crude oil has now exceeded this 50-day moving average. We have our 50-day moving average for oil and our 200-day moving average for oil. Well, we took that out earlier last week, I should say, and today's action definitely had an effective close above that. I thought we might see some resistance in crude at around 51. I was really looking at a series of bottoms in the market in which, historically speaking, we had a supportive area for oil pricing, and for that reason I felt we could have an area in which we found resistance, hit that, and then kind of traded lower and traded sideways. With this in mind, in terms of now new upside targets, if we get a follow-through on today's move, realize we've got these highs up here at 54. We're already at 51.75, so what, about $2.25 away from there. We could certainly see oil move back into this particular price point just above $50 and then move sideways from there. And when we look at the dollar index, I've just pulled up a daily dollar chart. We can see that today's upside move, 0.2%, not that large, but what it has done is put the price point squarely at the 50-day moving average in the dollar index. If you recall from yesterday's show, we broke above that in normal trading, but we closed with this doji, meaning the open and close for the session were very, very close. And today we moved right to the point, but I still think there could be some weakness in the dollar. And to illustrate that, let me go ahead and pull up a Japanese average chart. And I've just done that. We're looking at a daily chart, this, of course, of the dollar index. And what we can see is when we look at today's move, because of the point that the market closed at yesterday, along with today's move, we do have the wick showing back up, this lower wick. That's important. And what's also interesting is we definitely have this star, or this potential pivotal candle, as you get here or here or here. You get these doji pivotal candles, but you'll also get them along the way when the market consolidates. So we know that this is telling us that the market is either A, consolidating, or B, getting ready to pivot, and we'll witness a key reversal. We could see either in terms of technical levels of resistance right now, the major level of resistance sits at around 101.02. My recommendation is for those trading long positions, whether you are at 50, 1250, or 1237, all stops need to be below 1239. All traders should maintain their long gold positions. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Talk to you then. Bye-bye.